Hello. Supposingly, we're quoting a customer to sell him 5 split AC type number 1, and we're quoting the price of 605,521.25 plus 15% sales VAT. So the total is 32,606.25 plus the VAT or the taxes for 4,890.94. So total 37,497.19. Here we have decimal points. Okay, so this will make it hard, especially for cash payments with the clients. Also, it is like hard for the accountants to follow up on numbers, etc. Okay, so what can we do to eliminate the decimal points? Okay, basically the logic is to bring them down to like 37,497, eliminating the 19 halala. Okay, if we increase into 37,498, this the client might reject. Okay, so the best thing to do is to ignore the 19 halala and just forget about them. They will become as an expense, like a miscellaneous expense or a rounding expense. So what shall we be doing? This tax, the VAT tax, we can't do much. I mean, this is the minimum we can report to the government. Okay, we could report, like 4,891, but definitely we cannot report to the government for 4,890 because we're violating the 15% on the sales, on the invoice itself. So what shall we be doing? We should be going into the settings. Okay, and there is a function called cash rounding. We should tick on the cash rounding box, activating this function, and we should be saving. Then we should be coming up with some kind of methods. Okay, we have this cash roundings here. It becomes part of the configuration of the accounting application, and if we open up the cash rounding, then we should create like a method. Okay, I have created two methods. One is cash rounding to 1, which means that to the 1 real. Okay, and another one is modified tax amount up to like 1 real. So if I open up this method and make an edit, so this is the name of the method of the cash rounding, and then this is the rounding per session, which is basically 1. Okay, so it is 1 real. Okay, the strategy is to add a rounding line, because other strategy is modified tax amount, which we will consider after considering this method. Okay, so basically it's an add rounding line, and I have to define an expense account or an income account. Okay, or one account, which is basically the expense account that should have the debit, okay, or the credit. When will we have the debit? We'll have the debit if the rounding method is down, which means if we reduce our amount up to 1 real, okay, then there is a fraction of real, halalas, that should be as an expense down. It is up, then it will become a credit to the expense. We will see together the accounting JV, the accounting entries. So if we go into this sales order, okay, the amount is 37 497.19. Okay, and these are the taxes, 4890.94, and the sales income is 32,606.25. We will confirm, we will deliver, and we will validate. if we go into accounting, we go to the journal entry, to the JV, okay, inventory valuation. Then we have this one. Okay, this JV is basically says debit inventory out with this figure 11.41.65. This is the cost of the inventory. And the credit into, we will credit the inventory valuation account. Okay, so we will go back into the sales order and we will create an invoice. If we do create an invoice, then we will go into, before we post, we will go into other information and we will define the cash rounding method. The cash rounding method. Here, the cash down to one complete 1 real, okay? And we will post. Okay, if we go to accounting, check the JVs. And we will go to the invoice journal. Customer invoices. Then this is the customer invoice. Okay, and we can also get it from the sales order. Okay, this is the invoice. Okay, and these are the entries. What happens is sales, the product sales is the same. This is our income. So with the halals, okay, with the fractions. Okay, but what we are debiting the client account, okay, is for minimum is the 1 real less, is the halals above like 1 real. We're debiting the client with with no fraction. Basically 37497. We're taking out 19 halals. Okay, and then these are the this is the cost of the inventory, debit the cost and credit the inventory out, the tempo account. This is the temporary account. Okay, then we will have a difference between what we're quoting, what we're recording as income, as sales, and what we are recording as a liability on the client, the debit. And this is the 19 halal. The 19 halal is our expense. It becomes to miscellaneous expense, okay, as an expense to the income statement. Okay, if we are making the rounding up, not down, okay, then we will have this as a credit, because this amount, the receivable, will be higher than the revenues. This is case number 1. Okay. Okay, if we choose the other method of the cash roundings, basically modify tax amount, okay, we have to choose like 1 real, the rounding per session, or halals, okay, whatever the strategy is, depends. Like for example, if it's a supermarket, okay, maybe we will round into tens halals, like into like 60, 50, 70 halal, okay. If it's like a trade, maybe we will not ask the client to pay these halals. It depends on the strategy of the management. And we have to choose the rounding strategy. I choose modified tax amount. So the one who shall be modified is the tax amount, and we will see how. And rounding method should be like down. I think the client will not accept up, okay, or the or the tax authority will not accept up. So we will check this out. We will go into sales order. We will go into sales order. We will create. Okay, we'll create the same sales order with the same amount, like 32,606.25, and these are the VAT, and the total is 37,497.19. We will duplicate, and we will confirm, we will deliver, and we will validate. This will give us exactly the same JV we've seen in the method number one. So let's go into accounting, journal entries. We'll go into journals, inventory valuation journal, and then this is the entry. Basically, it's debit the inventory out, the temporary account, and the credit is to the inventory valuation account. Okay, so the goods are getting out of our warehouse. If we go into the sales order, okay, and we already have delivered, so we will create invoice. If we create an invoice, then before posting, we have to choose the rounding method, cash rounding method, like this modified tax amount, and we will post. Okay, basically, if we go to the journal items, what we will see, the income, the sales will be the same, the revenues will be the same, because this is our revenue, okay, and the client has been reduced by 1 riyal, to the minimum 1 riyal. Okay, the halalas have gone. It is like 19 halala has gone already. Okay, the sales VAT should be exactly the same, because this is what the government expect us. If we do change here, okay, then we might have trouble with the government, because this is what we're supposed to pay for the government. That's why this entry, the difference, okay, the difference, okay, the effect is not to an expense account. The effect is to the sales tax payable, reducing the sales tax payable, okay, by 19 halala. And in this case, we're not giving the government exactly, because this will reduce this amount. Okay, so basically what we are doing is giving the money, is giving lower money to government, and 15% of this amount is not the difference. It is 4,890.94. So this method is not desirable at all. Thank you so much.